What's going on with Bitcoin? What is up with the price? Bitcoin is on the move. It's starting to retrace, back test a little bit. It looked like it was off to the races. So now it's got a little pullback and it's doing a little bit of a retracement, trying to test the bottom range of where investors feel like there's a good price. So there's a couple of things going on with Bitcoin. There's a lot of great news in the fundamentals with countries wanting to adopt Bitcoin as a currency, other countries getting on board, but there's a lot of resistance to that. And the question is, why is that? Why would a country resist, or why would a bank resist a country adopting Bitcoin as a currency? There's a lot of challenges that come with that. The World Bank is very concerned about it and told El Salvador that they are not going to assist in the process of adopting the currency. Bitcoin is too volatile to be used as an efficient form of currency, and it can really affect a bank's balance sheet. It can affect a country's credit worthiness. And there's a lot of misconceptions around what Bitcoin really is, what it can be used for, and how efficient it is. So it is digital gold. It's a store of wealth. It's an asset. It's property. It's not currency. And cryptocurrencies themselves aren't currencies either. They're assets. They are venture capital, that whole space of altcoins, alternative coins, anything that's not a Bitcoin. Those are basically a venture capital space. Those are crypto assets. They are not currencies. So that is where a lot of the confusion is coming in between the governments, the banks, and federal government, sovereign nations, and banks are those things. So Central America seems to be banding together. A lot of the countries in Central and South America are talking about adopting Bitcoin as a currency so that they can get more widespread use of it, so that money can be transferred into the country much easier and things like that. But it does present a lot of challenges, and they're going to get a lot of pushback from the banks because it's very punitive for a bank to carry Bitcoin on their balance sheet or to be involved with it, because it is so volatile. It can lose so much value. They have to keep dollar for dollar reserves for every amount of the asset that they own, carry on their books. And if it loses its value, they have to make that up dollar for dollar. So it greatly affects their ability to lend. The other thing that's going on that's really interesting. So the Fed came out yesterday and said, yes, we have inflation, surprise, surprise. And they acknowledged that inflation was running higher. They're still saying it's transitory. They expect it to come back down once we get through the pandemic, supply chains reopen and things like that. They said that they do not expect to raise rates till 2023, and they are not going to change course with monetary policy. In other words, pumping dollars into the economy. So what are they really going to do, and what does all this really mean in terms of the Fed and what their real plans are and what they're really going to do? Remember, what I say is you always want to watch what they do. Don't listen to what they say. Watch what they do. So Powell has a very tricky job. He's in a very tight spot right now because there's not a whole lot that he can do besides print more money and lower interest rates. Interest rates are already about as low as they can get. And, I mean, how much money can you really print, right, before it becomes a real problem? And we already have a problem. Every asset is in a bubble right now. The markets, real estate, stock markets, cryptos, everything is an asset bubble. And that's what's going on with Bitcoin. So if you look at the charts, we're kind of bouncing around in this range. And as I've said on a couple of videos, and by the way, Gareth Soloway will be back with me on Monday for a quick update. And we're going to talk about how institutions are trading this market. We're going to talk about how they're using futures to trade the market, how these CME gaps, how that affects things, and what that's all about that you've been hearing about. So look for that on Monday. Gareth Soloway. I know everybody enjoys Gareth's summary of the markets and his take. And we will have him on Monday to kind of go through things. And his position hasn't really changed. It's pretty much the same unless something happens over the weekend, tomorrow or over the weekend drastically. I don't think anything's going to change. From what everybody's saying is that from here, we've got one of three outcomes, right? You could just continue to trade sideways in that $30,000 to $40,000 range. Like I talked about, that's a huge liquidity pool. There's really no incentive to move out of that range for professional traders. That's a huge margin. That's a huge area of opportunity for traders to just kind of run in that range, day traders, and get these big moves with Bitcoin up and down every day. thousands of dollars, 10, 20, 30% up and down over days and weeks. This is the daily chart right here. And you can clearly see that we are still in a downtrend. So right now, as far as the higher time frames on the daily, here's your weekly right here. You can see it even better on your weekly. We are still in that downtrend. We have not put in a higher high on the weekly. That's where that 46,000, 47,000 range comes in that we talked about. And again, you really don't have the all clear until you get back above that 58,000 range. And we could bounce up into that area above the 40,000 range and play around before you get any kind of a big sell off. And then if you look at the monthly, again, we're still in a downtrend. So no matter how you look at, go back to the hourly here, we are still in a downtrending market. You can see it kind of bouncing around. It's found some serious resistance at that 37.7-ish range. It's kind of playing around in that range, trying to see which way it's going to go, up or low. And you can see the volume candles down here in terms of gauging the activity, and it looks pretty evenly split right now. With Bitcoin trying to find a range. Is it going to go lower and bounce around down in that 30 to 35,000 range? Is it going to go a little higher and stay up in this 37 to 40 range and maybe get up into the 40 to 50 range ultimately before we get that back test all the way back down, potentially into the 20,000 range? And somebody asked me, they said, why would the institutions want to drive the price lower and freak the market out? Let's get back on a daily here so you can kind of see this action here, and you can see what I'm saying in these ranges from 30 to 40,000. Let's say you're trading and you're working with a book of $100 million and you're getting in and out on the daily. I mean, these are some big moves that you can make a lot of money here. If you're making 5, 10, 15% daily on 100 million bucks, you're doing pretty good. These are huge returns. So there's really no incentive to get out of there. And then somebody said, well, why would they want to drive the price down? Well, ultimately you're going to exit this range and you're going to have to move this market up. So if you have a long-term view, and if you look at right now in terms of institutional adoption, in terms of sovereign adoption, which is, again, going to prove very difficult because the central banks, the large banks, are going to be very resistant right now to countries adopting Bitcoin as a currency. So it's going to be a slow path. I'm not saying that it's not going to happen or can't happen. I'm just saying it's going to take a little bit of time to work through all the bugs, work through all the issues. There's a lot of legal, economic issues, a lot of social issues in terms of putting Bitcoin in the hands of a poor country and people, people that may or may not have a lot of money. And if they take everything they have and put it into Bitcoin, and then all of a sudden it loses half its value again, I mean, that's extremely punitive. So it's very unstable right now. So a lot of the banks, a lot of the other countries, nations, governments are very concerned about that because of the damage it can do in the short term. And ultimately, everybody agrees that it's going to go higher. How high will it go and how fast is the real question. And nobody knows the answer to that. Just like nobody knows, is it going to just continue to drop straight down from here? And if it does drop, how low can it go? And I know a lot of people say it can't go below certain levels. But back when Bitcoin was $20,000, a lot of people said it couldn't go below certain levels and it would never go below certain levels. And it dropped back in March, if you remember. I mean, we had a high of, 10,000 at that point. It dropped all the way down to, $3,700, $3,000. And prior to that, it had hit $20,000, right? So, Bitcoin can do anything at any time. And that's the problem, is that it could go from $3,000 to 60, which is what it did over an 18-month period, 65, and then drop all the way back down to 30 in the matter of a couple of weeks, and then dance around here for a little while, or it can go straight up, and we just don't know how far, how high. So the real question is, what's going to ultimately drive that price action? So back to the question, why would the institutions want to get out of this range if they can make so much money, drive the price lower, potentially compromising confidence in the market? Well, at this point in the game with Bitcoin, as long as it's been around and with what's going on, and as much money as there is to be made trading Bitcoin, the price will not ruin confidence from an institutional standpoint. It might shake the confidence of the average investor, the general public, a lot of people that aren't familiar with this and just can't stomach this kind of action, that saw nothing but straight up. But as far as the professionals go, there really is no limit unless something is just fundamentally structurally wrong with Bitcoin that none of us know about that could ultimately take the network down or something like that. If something like that happens, and there's just some sort of an anomaly, a black swan within the system itself, within the network, that creates a problem, you're not going to see confidence no matter what level it gets to. You'll just see more and more professional investors get in and kind of drive the price up. And once it gets back to a certain level, then the retail investor will jump back in and get back on board. But ultimately, that $20,000 level, I think, is where the institutions would like to see it and accumulate for that ultimate drive up, because the longer it's around, the more it survives. If it gets driven down to 20 or even 15 or even 10,000 and rebounds quickly, well, that's going to restore a lot of confidence. And these institutions that are generating liquidity here, so they can ultimately drive the market down by selling at a loss here on the way down, so they can accumulate twice as much there and work their way back up. It's a long-term gain, long-term game that they're playing and working in a strategy. So they're just spending capital. They're investing at this level to drive the market down, to accumulate 2-for-1 at this level, to ultimately drive it back up to these higher price point targets that the institutions are talking about. And it's these same institutions that are talking about $250,000, $300,000, $500,000 Bitcoin that are doing this right here, that are creating liquidity here to drive the market down, to ultimately drive it back up to those prices. So they're talking up their book here in preparation for that, to build confidence in the market. There's enough activity going on, there's enough volume, and there's enough of a value of the market cap, which is ultimately just the value of the asset, that there's enough confidence in the market that unless something seriously structurally wrong happens, a seismic event to take the network down, you're not going to see it go away. You're not going to see it disappear. You're going to see it just, gain more confidence over time. And especially the more stable the asset is, the more stable it becomes, and the more stable that rise gradually is, the more confidence will be instilled in the market. So driving it down is not going to reduce confidence. It's not going to remove confidence. It's going to build confidence when it levels off and works its way back up. And the lower it goes, and the more steady it is, and the higher it goes after that, the more confidence there will be in the market for the long term. So those are some of the challenges that Bitcoin is facing with sovereign nations trying to adopt it as a currency. There's going to be a lot of resistance to that, and naturally so. There's a lot of challenges and issues and problems. It's not a real simple solution to do something like that, and that probably wasn't the best move for a country to do. They probably should have studied that a little bit more and taken that a little bit more into consideration. Something to look at here. So one of the technical aspects, so I'm not a technical analyst. I look at market fundamentals, I look at the economy, and I take everything into consideration, like the Fed's move with interest rate policy and quantitative easing and what they're doing. And again, I'm going to watch what they do, not what they say. But I look at the technical analysis from a lot of the best analysts out there, and I look at their synopsis of what's going on. And remember what technical analysis is. It's just tracking past performance. It's looking at the indicators. It's tracking the behavior of the price, which is human behavior driving the price. Sometimes there's machine trading and bots involved, but it's price action that you're tracking to try to get an understanding and a prediction of where the price could possibly go. Nobody knows for sure. The best technical analysis in the world can't tell you where a price is going to go, but when you take the fundamentals, the whole macro environment, and you put it all together, you can kind of get an idea where the market's going to go. But nobody knows if it's going up, going down, or going sideways, or when. You have to look at the trends and see what's happening. And one of the things that people utilize from a technical standpoint to validate this sell-off and this downtrend was this big macro head and shoulder. So you had this shoulder here, you had the head here, and you had the shoulder there, and then the dump. And everybody knows whenever you have a shoulder, head, and shoulders that you're going to dump afterwards. So what we're potentially developing here, and this is what a lot of analysts are looking at now, is that you have a big macro shoulder there, then you have the head here, and you're developing that other macro shoulder there before you ultimately get that big downtrend. And if you remember, one of my sayings from the markets is, how do you get down the mountain? A lot of times you get down the way you came up. So you have that shoulder, you have that big head, and you have that shoulder. And a lot of times when you're scaling the mountain, you think the peak is a lot higher than where you really are. And sometimes when you're coming down the mountain, it looks a lot higher from where you came from. So it's an interesting perspective to look at how this side is developing similar to what happened over here. And I did a video a few weeks back about that in terms of that macro move that's making there and, coming down the mountain kind of the way you got up. Now, again, these are just trends that I'm looking at. So I look at trends, patterns. I listen to what the analysts say. Everybody's talking about the death cross here, and everybody knows now. I think that that's a lagging indicator. If you don't know, that's just a lagging indicator because you have these averages in price action. So as the prices change, the averages are going to change over time. And these crosses, you can go back and look at the history of Bitcoin, and there's people that will tell you that a death cross can indicate that the sell-off's already happened and that you're going to move up. Some people will tell you that there was a sell-off that started before that. You might have a little bounce, and then you have your big sell-off after it crosses. So the thing about technical analysis and charts are, it's kind of like numbers on a spreadsheet, right? When you're producing financial statements as a company for investors or for your annual reports or for banks and lenders, or prospectus, you can make those numbers look however you want, and you can kind of interpret numbers however you want. I mean, numbers are what they are. The truth is in the numbers, but you can make them appear certain ways by doing certain things. And we have all kinds of people in history that we've had all kinds of cases where people manipulate numbers. Well, charts can be the same way. You can read into charts whatever you want, and you can look at kind of almost any trend, and you can get a dozen different technical analysts all using the same indicators, the same theories, and the same type of analysis, and they'll all have different views and different interpretations a lot of times. So it's really interesting. So what you want to do is you want to just take the best of the best that's out there and do your own research and determine your own outcomes and your own positions and how you're going to trade things and how you're going to work the markets. And if you're a long-term holder, then you're a long-term holder. And that's the other question. A lot of people say, well, if I'm a long-term holder and I'm never going to worry about it, I just bought Bitcoin and I'm not even going to look at it. I really don't care. I just bought it and I'm never going to look at it or never worry about it. Should I even be concerned with anything? And yeah, if you have an investment in anything, it's your fiduciary responsibility to be aware of what's going on so that that investment doesn't just go away. Now, I do have a friend that bought some and he's looking at it as an insurance policy. And his comment to me was, I don't care if it's worthless at the end of the day. I look at it like insurance. I bought it, and 30 years from now, if it's worth nothing, it's like insurance. 30 years from now, if it's worth, $500,000, then it was a great insurance policy and it paid off. So that's kind of how he's looking at it. I know a lot of other people have a lot more money than just a few coins or whatever, and he's not continuing to add to his position. He's just using it as insurance for the long term. So that's fine. But if you're using it for a lifestyle or for your retirement, then you absolutely have to pay attention to what's going on in the market. It's not daily necessarily, but the whole macro picture, because again, if something systemically bad goes wrong with the network, with the asset itself, or with governments, and again, the biggest narrative against Bitcoin is currency. Governments do not want competition to their currencies. That's where their power as a nation comes in. And the United States would love to see every country adopt the dollar as their currency, not for any other reason than that just strengthens the dollar and kind of helps maintain the power. And right now, the dollar is the world's reserve currency. There's no indications anywhere, even with inflation, that that's going to change. And with the inflation meeting the other day, the dollar went up. And if you look at this, the market's kind of sold off a little bit, except the NASDAQ. And the real question is, if Bitcoin is an inflationary trade, why is it not up instead of down? What about gold? Because gold is a hedge against inflation, right? And Bitcoin's supposed to be digital gold. Gold was down today. It's back up after market a little bit, but it did sell off a little bit today. That's supposed to be an inflation trade. But what's going on? Why is NASDAQ up and the other markets down? So it's rotation, right? So when the Fed came out and said, we're not changing policy right now, that's a move into risk assets. Now, Bitcoin is a risk asset. So Bitcoin should be going up if the Fed says, hey, we're not doing anything. Interest rates are low. Leverage and liquidity is a lot of the reason for this run up. So this price up here is an artificially inflated price, just like the stock market was, just like real estate is. So this value here was largely a result of leverage and monetary policy. So the question is, how far can that take us again? Leverage has obviously been washed out quite a bit. A lot of those people won't come back to the market, but now the institutions are in here and a lot of them are trading on leverage. They're trading on borrowed money. They take their coins, they put them in cold storage and they borrow off of that. And that's what they trade with. So there's a lot of action and activity going on in the markets without actually buying and selling their own coins. They still have their coins in storage. So when you see a lot of these coins pulled off the market, put in cold storage, when you look at the on-chain metrics and on-chain statistics, that's a lot of what's going on there. So, to summarize this, basically what's happening is we're in this move now where Bitcoin is trading down to 37.6 as we speak. So this has turned into a little bit of an area of resistance here, right around that. Let's blow this up here a little bit, right around that 40,000 range. Then we drop down. This is on the daily here. Then we drop down to that yesterday, 40,000. And actually this is, let's say 17. This is today. Right now we're at 38.3, somewhere in that range. So right now that's kind of our resistance point, getting back above that 37, 38 range to get back up into that 40 range. So if we stay below 37, then we might continue down for a little bit before we turn back around and try to test back up into that 40, 45,000 range, maybe even up into the 50s before we ultimately send our way down. So that's one scenario. A lot of people expect that. There's a lot of, I did a poll asking everybody watching who's a bull, who's a bear, and you can look at that video the other day and kind of look in there. It looks to me like 70% of the people are bullish, about 30% are bearish, and even the ones that were bearish are bullish long-term, bearish right now because we're in a downtrend. So until that downtrend changes, it's kind of hard to change that outlook in the short term, but everybody is long-term bullish. So that's a good sign. A lot of people believe in Bitcoin. So even if the price goes down, to that question of how low can it go before you lose confidence in the asset itself, I don't think there is a bottom. I think even if it goes down to, if it went down to 5,000 bucks again or 4,000 bucks again, I don't think that would freak anybody out in terms of chasing them out of the market. I think you would have a lot of support. And I don't even know if it can get that low because there is so much interest in it now. There's so many eyeballs on it that a lot of people will be buying it up probably in that 20 to 15 range. I don't even know if it can go below there, but who knows? I mean, it can do anything and you just never know what people are really going to be thinking. And again, it depends on what triggers that event. If we have a seismic event and all markets are tanking, all bets are off. Everybody wants to go to cash at that point. So it's hard to say what could happen if you had a real black swan event like we did back in March when everything sold off and the only flight to safety was in the dollar. And that's another reason why our government and most governments don't want to see competition to the currency. So that's the interesting thing there. Now, on the institutional adoption narrative, so there's a lot of talk out there about pension funds, life insurance companies investing in cryptos and people creating funds in cryptos. So you got to remember those types of funds, those types of investors, sovereign wealth funds, sovereign wealth funds, life funds, pension funds, they have to invest in rated products. So right now, Bitcoin is not something they can invest in anytime soon. I know there's some talk about ETFs getting approved here in the next year or so. That's not going to happen probably till next year. The SEC has already said they just don't even have time to mess with it till next year. So until you get more broad adoption, you get some ETFs out there, you get a little bit more regulation, you get a little bit more stability in the price, and then you get this asset rated by the ratings agencies. Then you'll see pension funds, life companies, and the like step in. And that's likely going to take 3 to 5 years before you'll see them step in. And that's ultimately where like a Cathie Wood is talking about a $500,000 Bitcoin. It's probably 3, 4, 5 years from now at that level when you get enough broad scale adoption to where you get so many institutions and sovereign wealth funds and life companies and pension funds when there's that much confidence in the market, this asset ultimately gets rated. It will be officially listed from a regulatory standpoint as property, as an asset, kind of like gold versus a currency. And that whole debate will be off the table, which is a good positive thing for Bitcoin. The ultimate value, understand what I'm saying. I know there's a lot of people that want Bitcoin as a currency and they want it to replace the dollar. That's not the ultimate highest value of Bitcoin. The ultimate highest value of Bitcoin is an asset. It's as a safe haven. And it's as a hedge to inflation. And that's what you heard from a lot of the top investors out there in the world all saying based on what the Fed said, they're going to up their inflation trade and they're going to increase their allocation into Bitcoin. And a lot of them are only putting, 1 to 3% in right now, and they're talking about going maybe to 5. So that's what I'm saying. Sophisticated institutional investors, the real capital coming into the market to ultimately drive that price up, regardless of what you think about banks and institutions, ultimately at the end of the day, that capital needs to come into the market to drive the market up, right? The valuation of the market cap, which is the value of the market of Bitcoin. In order to get that number up into the $10 trillion range, you need a lot of money coming in the market. It's just not going to arbitrarily increase. You got to have money coming into the market to do that. And you have to have buyers. And the only ones that are going to be those are going to be those institutions that have a lot of capital that they need to put to work where there's nowhere else for it to go. And when you look at investment capital right now, they have a lot of choices for yield. They've got the markets, they've got stocks. That's why you see those assets increasing. That's why they're being pushed in there. But the treasuries, the bond market, that is going to greatly affect where the big capital goes, where the pension funds go, the sovereign wealth funds. As those rates rise, that will compete with Bitcoin a little bit. So there'll be some things to challenge price increases down the road. So that's about it for today. I just wanted to kind of bring an update here in terms of what's going on with this price action. Again, I'm going to have Gareth Soloway back on Monday. And I know a lot of people right now with these things, they get really frustrated and they're like, great, we get all this technical analysis and nobody tells us, where it's going. Everybody says it could go up, it could go down, it could go sideways. And again, that's all technical analysis can tell you is, hey, here's the chances. But the thing is that what the analysis will tell you is where those ranges can be. Right now, there's no indication that it can drop below anytime soon 30,000. It has to test down in that range. Right now, there's nothing suggesting it's going to bust out of the 40,000 range. It has to get above this 37, 38. And it has to close above 40,000 to rise up into that 40, 45, 50,000 range. So in the near term, those are your targets. And if you see it move down, it'll likely bounce around in that 30 to 35,000 range before it has a big breakout. Or, if it loses those support areas, then it can break way down. And if we get up above 40,000 and we close up above that, then you could have a good leg up around that 40 to 50, then it will test back. And then the question will be, because that'll be your big back test, where is the floor there? And that's what we'll find out. So liquidity, price discovery, and the longer this goes on, believe it or not, the better it is for the asset. And I know that's hard for a lot of people to hear, but hey, summer's coming up. We're all getting back open. Hopefully, wherever you are, the pandemic is subsiding and you can get out and enjoy yourself. And that's kind of what the market's looking for, is it's looking for everybody to kind of get bored, go away. Then it can make its big move when nobody's looking. So that's kind of how things work in a more institutionalized market versus a retail-driven market. And love it, hate it, like it or not, the market of Bitcoin is becoming more and more institutionalized every day, but it is going to take some time to get there before you have really, really broad scale adoption. I mean, in the whole scheme of things, there's less than 1% of the capital available out there in it right now. So there is a lot of upside, but we got to get through this period to get there. We have to get we have to get regulation in place. We have to get all the banks on board with how this asset's going to be treated, the Fed, the IRS, everybody on board, clear direction, exactly how we can treat this asset. And then we can move forward and we can be off to the races to those ultimate high levels. And it's going to be really fun to see how far this asset can go once we get through that time frame. So stay tuned. I will see you on the next video. And again, we'll have Gareth back on Monday. I've got some more experts coming with some great analysis. And I'm going to get some fundamental analysts on board as well, some institutional analysts to kind of give us a synopsis of what they're looking at, what's driving the news and the action from their standpoint, and what they see as far as the future of this asset and the crypto markets go in general. So I will see you on the next video.